Hello and welcome to this topic where we're going to look at the foundation tax configuration. And this slide really summarises our minimum tax configuration. So we've got, in terms of our configuration owner and options, so which legal entity, which business unit subscribes to this regime and appropriate tax. Remember, you can abbreviate this as a regime to rate. So you've got all the rules and regulations of a particular tax. You've got the classification of a tax charge. Under a tax charge, you would have the status, rates, and obviously linked to a particular jurisdiction. But in the text, you'll see they're also just giving what's your strategy to implement this minimum tax configuration. So you've got 3 bullet points. You must analyse the transactions and withholding tax requirements, make the key decisions, and analyse your transactions and withholding tax requirements. And remember, you have to associate who am I, where do I do business, what products do I sell, what processes are involved, and that will influence whether you're going to use the tax engine or the tax engine plus any partner introduction. So the minimum configuration, referred to as foundation tax setup, is this regime to rate. And nice at the bottom, it shows you, look, the 2 steps you need for that is manage tax regimes, manage taxes. And below that, you'll see you've got your prerequisites. First parties, legal entities, business unit, legal authorities would need to be defined. Geographies, if you're using a TCA, location tax, you'll typically be setting up a TCA type of location, and the ledger and accounts to drive your specific tax accounts for status and rate. Then you need the appropriate tax accounts and the detail of the accounts in the ledger. So that's all prerequisites. So in this class, we assume that has all been, in terms of, already pre-built for us. Also, in terms of, I would get you to also have a read when you've got time. Go to docs.oracle.com, have a look at the implementation tax manual. You can download or look at it online in HTML. And here on page 13, you'll find it's got an example of a foundation tax configuration. And it gives you in a minute what you can perform at the various tasks, and also gives you an example. So if I scroll up a little bit and get the majority of them on the form, you've got your tax regime. So that's where you put your tax content, your defaults, and your setup options connected to a legal entity or business unit, where you link to partner integration such as Vertex Cloud. You can associate fiscal codes, and you put in your tax reporting types. You can't do party profiles. That's another setup task, and a good example of regime there is they've picked one of the most difficult, Canada tax. So we've got Canada tax, governance, goods service tax, and harmonisation sales tax there, or tax regime should I say. Under the taxes, this is where you put a particular fiscal charge, where you could put tax applicable, override rules, whether you're going to use custom exceptions. And that typical examples on the right hand side is where you could configure goods service tax or harmonisation sales tax or province tax. In a sales tax or part of a sales tax, your jurisdiction is key. So based on your geographies, the range of locations. So here we've got Canada, Alberta and British Columbia. Tax status in terms of common rules that will default to the rates. And again, some examples: government serves tax, harmonisation sales tax standard. And under the rates, this is ultimately the rate that we apply to a taxation basis. You're looking at your GS standard, GS reduced, GS exempt, HMS, harmonisation sales tax standard. So very good. If you want to get a flavour of some ideas, then there is, in terms of the implementation manual. Also, in terms of in more detail, I've put this more as a sort of step-by-step. Again, the idea of using the rapid spreadsheet, there's multi-setup steps now, all consolidated into a simple spreadsheet load. But the big picture, again, tax authority, in terms of the government that regulates the tax rules, audits, and that's normally where you send all your tax reports and collection details to. The regime, set of rules that determine treatment of one or more taxes. Tax is your classification of a charge. Jurisdiction, that's your geographical area. Status, that's your taxable nature of a product or service. Tax rate, that's your appropriate rate for a period of time. If your tax has got recoverability, and again, that's a key, if you like, setup decision, if it's recoverable, what percentage recoverable, and your tax in terms of the tax you're going to use to drive your perhaps internal account reconciliation between your account values and your tax amounts. In terms of the tasks, not all of these are in terms of mandatory. Majority of them are in the configure to the regime to rate in terms of this foundation configuration. So regimes is required, taxes are required, status is required, jurisdictions are required, tax rates, tax rules tend to be optional. You will need to define your direct ones, and you can test it all looking at running in terms of the tax, in terms of simulator. Also, in terms of you've got in terms of to think about tax reporting, perhaps they should have there, even on the core setup, you might have to do in terms of more, in terms of defining jurisdiction and rates to drive your particular localization reports. Some examples, and this just shows you a single point of definition, quite a wide variety of different tax options here. Down the bottom, what we're going to focus predominantly in your case study is a VAT system. And although we're picking on Great Britain, you could apply this to any country using a VAT or indirect tax. So ultimately, the end consumer pays the tax. And you can already see we've got a VAT regime, VAT tax, and normally either the status or rates is where you'd have the variation. So we've got 3 rates in the UK of VAT: standard, reduced, exempt. You might also have to classify 0, export, and if you've got into EU, you've got different rules. So very quickly you can go from the 4 shown here. If you put export and intra-EU, you end up in terms of with 6 type of statuses or rates very, very quickly. US sales tax is another good, different example, but an example of location-based. So here you'll probably have less status codes, still a lot of variation of rates, but the rates are tied to a jurisdiction. And the jurisdiction, you would also, when you read the notes, you'd also set up a global jurisdiction as the default, and then each of the jurisdictions will have its applicable in terms of tax rate. So for the Georgia, 4%, DeKalb County, 7%, and the city is exempt at the moment. In the middle, you've got Canadian goods service tax, province sales tax, and harmonisation sales tax. So again, sometimes you get tax on tax. In previous releases, we had tax grouping. So again, the engine allows you, even with the core configuration, to configure these. And remember, there is a quick start on the rapid spreadsheet. There is some suggestions of the regimes and tax that you could use for various countries as a quick start to your configuration. So let's have a look at setting up. And the whole of this core or regime to rate or the tax foundation setup, extensive use of defaults. So you put defaulting rules at the regime. Majority of those cascade down to the tax. From the tax, they cascade down to the status rates, etc. So it's really, again, what is the appropriate level. The regime gives you the global configuration, and that could be overridden by a lower level, such as the taxes, the status, set or change their mind for that particular status or rate. Perhaps we don't allow ad hoc changes, we don't allow in terms of exceptions at some lower level. We've also got data-driven controls. So again, whether we're allowed to use recovery or not, we set that on the top level regime, and that will flow through our configuration. Perhaps before I go in terms of into the nitty-gritty, what I'm going to do is I'm going to move here to the application. I'm going to re-log into the application because it's just logged me out. And I'm going to move across to setup and maintenance. Remember, everything or any configuration is done within the setup and maintenance module. And if I look in terms of my financials and I pick on the transactional tax functional area, the minimum configuration look is our regime to rate. So regime, taxes, tax rates and rules. And if I expand that, you'll see I've got all of those aspects. Remember, in a previous demo, I've also gone for the older technique of creating an implementation project. So here, if I look at my tax implementation project, and I've loaded the full tax list as opposed to the rapid implementation list. So if I use the rapid implementation list, you'll see the rapid implementation list here lists 9. So in terms of the configuration, from regime to the manage simulator transactions. So if I click manage tax regimes here, and before we get into the nitty gritty of the slide, let me just search on 2 that have been configured and loaded, and they do show us the 2 sort of differences between a location tax and a VAT type tax. So here we've got a regime called US sales and use tax. If I put that into edit mode, here we'll see our control points and our defaults. So given a regime and name, US sales and use tax, the TCA or the geographical area is country, so the whole of the United States. It's not something we're tied to a parent record that you can do for various tax on tax. We've got a start date. You'll see in terms of our control and defaults, we've got a tax currency, we've got a minimum accounting unit, a tax position, a corporate exchange rate to convert if we need to convert transaction lines into our base currency. Tax inclusive method. So if is it £100 plus the 20%, so it's 120, that's what it means by non-inclusive. The taxable amount is a net amount and we add the tax to it. Inclusive tax, either standard or inclusive are the other options. So here they've put in standard, non-inclusive. Rounding is always a tricky one. I know going back about 15 years when I last implemented in Italy, we got this wrong in our implementation. We round to the nearest, and in fact we should have been rounding up. So our first 100 invoices were all wrong because we had rounded up. Round to the nearest where we should have been rounded up. Normally, if you've got a legal authority defined, you can populate them there. And then you've got really the general controls, such as, are we going to have an override of inclusive taxes if we've got inclusive taxes? Are we going to switch on so that we can use in our legal entity reporting unit, can we use our legal fiscal codes on our terms of legal reporting unit establishments? In this case, no, because it's not highlighted. We could have validation controls on our VAT numbers. It's not a tax on tax, so there's no compounding. You would expect in a sales tax that we have multi-jurisdictions. You would also expect in a sales tax that you didn't have tax recovery. Tax recovery tends to be the domain of a VAT. And in a simplified setup, just using the foundation, you can still override that setup by using in terms of product exceptions and customer exemptions. And at the bottom, you'll see back to our first party in terms of this tax has been, or we've subscribed with this tax to, in terms of the 3 different business units from healthcare to US business unit 1. So if I save and close that, so that gives you, or should give you, a sort of flavour of what you would expect to see on a locational type tax setup. What we're going to do next is to have a look at, in terms of a VAT configuration. So if I hit done there, I can go back to the, in terms of implementation project. Could have stayed where I was actually and just searched on United Kingdom, but I've gone back just to show you where it was in terms of the pack. And if I look in here and pull up United Kingdom, and here, well, we've got some of the regimes I've loaded, but let's go back with this core regime that's been loaded as an example, and I'm going to put an edit note on here. So at the moment, again, the country or specific on this regime is United Kingdom. Notice we've got a tax currency. We haven't set any minimum at the moment. So if I put 5 pence there, it would mean that my minimum reporting to the tax authority was up to 5 pence. Here I'm putting to every penny. There's no conversion rate that's been picked, so I'm going to pick one of the ones that's shared with the GL setup. Rounding, I'm happy with nearest, and most of these would be non-inclusive. What I'm going to do is, again, a little extra step, not in the case study, but here I've set up a tax authority. So in my legal entity model, I've set up a tax authority, and that's just a warning because showing you this cascading effect. I've put it on the regime and it's going to cascade down to lower levels, in this case tax statuses, etc. Now you could have a difference between the collecting and tax authorities, but in this case I've just got the same in terms of legal tax authority. In the UK it's called HMRC, Her Majesty's Revenue and Customs. So we in effect pay all the goods across to the Crown in terms of in the UK. Do we use the legal registration number as the VAT number for our third parties? This said yes. Can I manually override in terms of inclusive tax? Yes. Can I do the reporting configuration? So here we've got a difference from our sales tax regime. We didn't have this on. For our VAT system we do. In terms of if we look at the validation type, and I wanted to look at the validation in the number, do we allow duplicates? If we have a problem with the entering of the VAT number, do we have an error or just a warning? So I'm just going to make it nice here that I've got a warning to the end user. Normally you wouldn't have a tax on tax, so we're not selecting the compounding. And notice the difference here. Even though multi-jurisdiction is selected, we do have tax recoverable. So in a VAT system, you would typically expect tax to be recoverable either 100% or 0. And they've switched on tax exceptions and exemptions. That's not typical in a VAT, but that gives me the potential to use those at later part of the configuration. And down the bottom, you'll see I've been subscribed to the UK and the UK legal entity and the UK business unit. If I was going to punch out to a third party, and remember in the cloud, USA, Canada, and that's Vertex, that's where you would subscribe to the partner integration by linking based on your legal entity, business unit to this third party type of subscription. Hopefully you'll see we've got here in terms of our regime, and you saw there, it provides the default information, in terms of regulations, fiscal classifications, and that's where you register to one or more taxes. Part of the critical configuration there is the geographies. So geographies is vital and it's a prerequisite really. You've got the international country codes loaded, and then you use the TCA. If you've particularly got location tax, you'll be setting up the TCA to build that location into, in terms of various, divisions from the country level, so state, county, province, etc. So geography, very, very critical, not only on deriving where the tax is applicable, when you're looking at exports and intra-zone movements, if you're delivered from another country, inside or outside of some form of zone, very, very common in Europe, then always different rules apply. So prerequisite, before you can get to the spreadsheet, is the geographies are loaded, and you might load all of the, particularly for locations, use a third-party content provider to load all of those geographies into place, so they'll be used by the initial configuration and also be used extensively when you come to advanced rules to drive different changes to your tax calculations. And I've run through them in terms of application, but if you want to, I ran through them in the application, but if you look at the defaults, you might want to just read in terms of through these few slides to give you those defaults in terms of and what they drive in terms of the rounding effect, minimum, whether the manually can override at the bottom. I talked those through in the app, so I'm not going to spend a lot of time on these slides. And that is where I'm going to pause, where we've discussed the regime. So that's setting up our control and defaults for the common rules, and below that we're going to attach our tax codes, or in terms of our classification of a charge, i.e. our tax codes.